Welcome in. I am the crypto bull god, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment. You got to click the bell icon for notifications to know when I go live each and every single weekday. You can find me on Twitter, you can find me on YouTube, you can even find me on Instagram and TradingView. It's one word, crypto bull god. I am proud to have with me today, and here is his Twitter page, Tony the Bull BTC on Twitter. And here is Tony. Very happy to have him on as a special guest today. Tony is a very well respected technician in the space. He has been working towards getting that credentialed as a chartered market technician, which is very high, well respected credential as a technical analyst. I really appreciate his content because he's a very genuine individual who's passionate about the space like myself. It puts out a lot of logical technical analysis. So with that, Tony, I'm going to turn it over to you so you can give a brief introduction to everyone tuning in.
Yeah, so once again, thank you so much for having me, and thank you everybody for tuning in. I'm Tony the Bull. I am a studying CMT level 3 student. Kind of being able to speak with authority on things was really important to me. So I sought to sort of get credentialed, kind of have that background of study. And yeah, I am the founder of CoinChartist.io. I'm actually going to go ahead and quickly screen share here and show off a little bit of my stuff here. So you can see I run a weekly newsletter where you can pick up all kinds of information. I also have the website itself where you can learn about some of the topics that we're discussing today. I have one of the largest Japanese candlestick databases out there. Chart patterns, technical indicators. Again, we're going to talk about Hurst cycle theory and Elliott Wave principle today. So yeah, if you're interested in some more information, please tune in to check it out. But yeah, that's my intro, man. Looking forward to kind of digging into some charts.
I am too,
So
and I wanted to vouch real quick for the newsletter. I don't know if anyone caught my tweet on Sunday, but I read Tony's newsletter for the first time, and what I found impressive about the newsletter, I know as a content contributor, one of the most difficult things to do is to find the right balance to keep everybody engaged, no matter what end of the spectrum you're on. If you're a novice or whether you're somebody who's well versed in technical analysis, this newsletter, I think, hits it. I mean, I was learning some things. I saw how I felt very engaged reading it, and I also felt like it was the verbiage was in layman's terms, so really a novice could really understand. So I commend you on the newsletter. I really appreciated it.
thank you. Yeah, and I appreciate you offering to come in and share some of your insights and thoughts as well. So making sure your audience sees this as well, so they can get some additional thoughts here if they're interested in hearing more.
Absolutely. And so I think part of the strong value is having you and a guest on the channel today is for you to offer your insights, your perspective, because everybody on this channel always hears my own viewpoints. And one of the things that I routinely speak to on this channel is, look, I'm just one data point, right? There's other value added technicians in the space, yourself included. And so I really want to open up the floor to kind of hear your viewpoints on several different topics, and wanted to lead off just talking about market sentiment, because market sentiment, and I'm not sure where you typically look for market sentiment. I know I've typically used the fear and greed index, which I haven't looked at actually in quite some time, but we're at a really interesting perspective, in my opinion, in terms of what the market sentiment is. So maybe we can just kind of start there and get your thoughts on what the overall market sentiment is.
Yeah, for sure. So, I'm lucky enough where I have been in this space for a while. In fact, realistically, I probably would say I got in around here. I did really well, bought a bunch of altcoins up here, and then paid for it down here. And then, just like a lot of us, we tried to pick ourselves back up, and from there, I started to learn things and kind of get a better grasp on the market. But um, you know, this is a really confusing thing for me in terms of market sentiment. So I'm a very by the textbook guy. As you can see, I have some tabs here for Elliott Wave up. and this was something I wanted to go over today to sort of talk about the sentiment. And so essentially, what my thoughts are overall is we're in some sort of a wave five here, so we can count the five waves right here. And then additionally, though, as you know about Elliott Wave, or and not everybody in the audience may know, so I should explain it better. But in addition to these larger waves, the smaller waves sort of break up into one, two, three, four, five. So right here, we should be somewhere in this area, and if we're going by the book, wave two, if that's where we are, we're potentially going to test some sort of lows. This could have been it right here, and it's the underlying trend is still considered down. I very much remember this moment over here where or even over here, where everybody sort of assumed things were still going to be going down. We had a pandemic hit, and I mean, during this moment, people weren't thinking about this happening after. So,
Not at all.
just yeah. So, I think that people are still sort of stuck in this recency bias of here. In the larger picture, we're here in the wave five, but in the smaller term picture, yeah, we're somewhere in here still. So, yeah, what are your thoughts on sort of that perspective of where we are?
Yeah, I tend to agree with you. I think that we're as far as the market sentiment is concerned and where we're at in this wave structure you've pointed out. I find the market to be very complacent right now, very
Mhm.
complacent. And I think that you're going to give another plug for your publication. I think that you described it really well. I appreciated what you said. I think the thing that the market hates the most right now is sideways movement, right? One of the
Mhm.
things I had pointed out on my channel back in June was that from April to June, we had 2 months of consolidation. Yes, it was moving down, but it was consolidation. And then in a week, we erased all of that correction and consolidation and went all the way from 25,000 up to 31,000 in the span of a week, right? People are so impatient. I think there maybe is a positive correlation here that exists between the market sentiment and the complacency that people have, the impatience, and how people are on their smartphones all the time. They're very their attention span is very short. People want to get
Mhm.
rich quick, right? And so when the market is actually building structure like this that you're pointing out, you and I and other technicians who can read charts can see this, but many of the retail investors that are currently in this space, which most of them are not even in this space yet, invested, they don't see that. They're just very, very complacent at the moment. That's my sense.
Absolutely. And then, weirdly, the human mind sort of tricks everybody mass psychology wise. They don't want to buy down here when things are slow and, not really working out as expected. They want to buy up here when they've already seen this enormous move. But as you can see, it starts to get more and more dangerous the higher you buy up. But yeah, for some reason, the human mind is really wired to work against you. Which again, why I think some of this Elliott Wave stuff and having guidelines and rules to sort of watch for is really valuable in the overall context of things. And like you said, that's really difficult for the average person to kind of know and look for. So there is a ton of value in following analysts like myself and yourself, and even taking the initiative in learning more after is really important. So I'm a big advocate of people sort of learning for themselves, which is why I've developed so much sort of educational material. And yeah, while I'm thinking about it too, I'll give your whole audience a copy of this book for free, the Elliott Wave, the
Oh,
ebook.
nice.
I'm partnered with them, so they'll let me pass it along. So we'll do that as well.
Very, very nice. Yeah, and it's interesting, and when I have not studied to become an EMT, but or a CMT, excuse me, a CMT, but I took professional trading classes, stock reading classes, and one of the most important lessons that was taught in that series of classes was to be robotic, to put your emotions aside, right? It works any time in life, if you actually think about it. A lot of the stuff in buying and selling stocks, it's very transcendent to other things in life. Think about this. Whenever you've made a decision purely based on emotion and not logic, it probably tends not to work out well for you, right? There's this. I don't know if you've ever read the book on emotional intelligence, but when your emotions are very high, your intellect is very low. Okay, so
Mhm,
when we
mhm.
start to get to this greedy part of the cycle, to your point, this is when we want to start to become weary that things could become getting towards a topping zone, but we are nowhere near that part of the cycle, in my opinion, yet.
Completely agree with that statement. Yeah, nowhere near. And yeah, it's unusual, at least the proximity to what I consider a bottom. The fact that so many people really just expect this to continue. I mean, when you start to look at the lengths of how long this correction was, it's the longest one ever in terms of drawdowns. And then even the buildup here, if you do some measuring, I want to say that's 32 bars here, and this is going to be a little over, yeah, 38 bars. So I mean, it's only six weeks difference so far, but this feels like an eternity to me compared to this for whatever reason. And I'm sure a lot of other people feel the same. But I also think that's again recency. This didn't feel as long of a wait when this was so sharp, and this only happened a short while ago. We went through all of this, so I guess maybe the wait is a little bit more painful at this point. But yeah, the market's making people very confused, and if you think back to here, you know, it's tough to start to sell when things are looking like this. Yeah, it's I definitely don't advise definitely being strategic, managing risk, playing defense, and waiting for more confirmation. But yeah, this looks really good. I can't imagine that people are still really kind of looking for the whole 10K thing.
Yeah, and I never ever suggest one of the worst pieces of advice you could give someone, never financial advice, but one of the worst suggestions you could ever give is buying a falling knife. However, when prices are at suppressed levels and you can use price indicators and moving averages and different time frames to aid you in that decision to scale in, it is monumentally critical. I remember when we started breaking 20,000 back in 2000. It was either December 20 or January 21. I forget exactly when. But when we broke 20, I said, well, I mean, I said to myself, this statistically most likely scenario is now that we've broken around 20,000, the prior all time high, we're going to come back, we're going to retest and continue going higher. The train did not stop, it kept going. And that's why it's important to really understand price levels that are important to scale into at suppressed levels so that you can catch that ride up and you're not waiting for pullbacks that are just, they're not going to come.
Yeah, you're absolutely right. And thank you. Perfect setup for kind of promoting one of my tools here is, yeah, I've designed some tools for kind of just that. My tools are more kind of trend identification tools. I'd like to say this is my Bitcoin bullseye. And I like to say, people should kind of start scaling out here, scaling in here versus like it being straight up a buy or sell signal, especially because it can trigger a little bit early. It's all based on long-term moving averages, but it gives you a good sense of when this trend was sort of running out, and so is when this trend was running out. I also have another tool called the Trend Wrangler, and literally this is just a moving average that works across a lot of different time frames, and then I like to actually shut off the candles, and you can see this trend is up. This trend was down for sure. This was a bit of sideways, but I mean, it really does give you a good picture of things. And then finally, I look for confirmation with my Raging Bull tool. So I'm thinking about adjusting it a little bit more since it did fire a little earlier than I wanted here. But when this thing lights up with my yellow color, it's usually a good sign we're going to get some serious strength after. Occasionally you do get the anomaly. It seems to be like on a B wave, it might misfire, but overall, when this thing lights up, it's a good sign you're going to get some decent ROI out of it. So, yeah, again, just like you said, not financial advice, but these are all available with a premium subscription to the CoinCharter VIP newsletter.
Yeah, and the other thing I noticed on that trend wrangler, if you pull that back up, when candlesticks start closing above that line, that moving average, that line, that's when you really start to see momentum pick up, right? And you can see we were suppressed under that line since about late 2021, or excuse me, late 2000. I guess it was 21. Is it early 22 or late 21? late 21.
Yeah, I think
Yeah.
it actually, yeah, it closes right under in late 21. You're right.
Yep. And now that we're above that, I mean, if you kind of go back in time and take a look at that price indicator in relation to the candlestick sticks, it suggests that we should see continued momentum to the upside. So very helpful tools. Also enjoy the names too. You have some pretty kick-ass names. Raging Bull
Thank you.
and Bullseye. I like that.
Yeah, a little bit of marketing background. Been a content guy for a long time, so I like to think that I'm even better at that than the technical. So yeah, hopefully I can continue to make some good stuff for everybody.
Yeah, this kind of feeds in well, and you're probably going to get into this now, but kind of looking at that chart, it reminded me of the different cycles, quote unquote, cycles we've been going through. And I've seen some unique charts that you've shared on Twitter. So maybe you could speak a little bit about some of, you have some things up here concerning cycle theory and how you look at different cycles in Bitcoin.
Yeah, so this is pretty obscure stuff. You don't see a lot of analysts using this. I just became truly fascinated with it. I had read The Fourth Turning from Strauss and Howe, Ray Dalio's Changing World Order, a lot of books on cycles, and just became really fascinated with cycles more than anything else. I always kind of felt that time was even more important than price. Really started to dig into this stuff. I used this sort of time cycle series here to actually find this bottom and pretty well and prepare for it. But anyways, so per cyclic theory breaks down into all these different principles. And I mean, I laid them out. Everybody's welcome to kind of look at them, screenshot if you want to kind of dig in more. But I only really want to talk about a few of them. So principal commonality, all asset prices move with similar elements in common. Giving just a quick little example of this, like this just really states that things like the NASDAQ that have similar tech sort of attributes as Bitcoin and crypto, similar investor psychology and types, it's going to kind of behave in a similarly cyclical format. And that those cycles in the NASDAQ actually do impact Bitcoin. So like truly all these different markets are really important in this type of analysis. Cyclicality says you're definitely going to notice some sort of cyclical repetitive behavior. Summation is when like things line up, which I can kind of show you a little bit more in the future. Harmonicity means the smaller cycles inside the larger ones. Pros synchronize really well.
Can you speak on that a
And
little
then
bit? Just real
yeah,
quick, that harmonicity, can you speak to that again real quick?
yeah. So this one's really interesting. Harmonicity is basically within every larger cycle, and this is going to be really important to what I show after. Are cycles, smaller interest cycles that are in one halves and one thirds. And so you can kind of see the influence of this. See this rounded nature of this blue. You
Yeah.
can see that rounded nature here, and
Yep.
rounded nature here. And then the dip here sort of wasn't as deep because we have the amplitude of the bigger cycle and amplitude of the smaller cycle. What's really interesting too is a lot of these smaller things line up extremely well with crashes,
This
as you can
reminds
see.
me of this. This reminds me just looking at this kind of high level because one thing that I could benefit from is taking a look at time, the time element more than just the price data. I haven't studied any of her cyclical theory here, cyclic theory, but it reminds me of Fibonacci levels. When I get this, it's just so funny being a math nerd, it is just so funny how numbers and cycles and cyclical things always play out in everyday life. I feel like sometimes my father and I, and my father is not a technical analyst. He's an awesome wealth of knowledge when it comes to history, and he has more of a fundamental view. I feel like sometimes he and I speak the same language, speak similarly, just in a slightly different language. But it's true that in all of this stuff that you're showing here and you're going to continue to get into, human emotion is baked in all of this stuff.
Absolutely. In fact, that's my favorite part of all of this, and I think a big part of the time element as well. And you brought up Fibonacci. It's just amazing that certain things, the market stops at these certain ratios. And it's all based on this sort of crowd psychology thing. Yeah. So very fascinating how human emotion plays into it all. But yeah, I guess moving along here, you can see amplitude. So these things, this is the length, and amplitude is the middle point, and you can kind of see like the height of the cycle starts to really kick into high gear during that point. Um, the one I really wanted to talk about though here, and this was the point of a lot of kind of going over these, was the variation. Everybody sort of thinks we're going to get this again over here,
Yep.
but we didn't get that here. We didn't get, like every cycle has to have variation. It's literally a principle of cycle theory. So, to think that, someone can just copy and paste this and put it on the end here and it's going to play out, I personally think is some of the worst technical analysis you can see. So, yeah.
Agree there.
And then further, yeah, thank you. And then further, so kind of the thing I wanted to point out earlier, where you can see that these ones lined up perfectly with here, the red and here, is that now these were the 1/3 and the 1/2 harmonics. Well, here's our 4-year cycle. I actually have this set to 4 weeks. It worked a little bit better for the cycle setups, but you can see 48 bars, roughly 48 months, give or take, a couple, like maybe a month or two, considering a lack of like 2-3 days each month. But, this is the 4-year cycle theory that, so far in Bitcoin has been pretty accurate. But now here's where, again, you have the 1/3 harmonics in a dominant cycle. This is my theory here, is that we're actually in a larger 12-year cycle that is coming to an end. And these are our 1/3 harmonics and why we get our wave 5. And it's going to end and we're going to get a huge correction over here. And this is back to that principle of summation, is this wave is ending here along with this wave. And then this major wave is potentially going to end here. So yeah, this is really a big basis of sort of why, I think the market goes up here. The last thing I'll show you related to this stuff is all cycle peaks and the troughs can be within 10% translation. So here you can see, oops, I'm a little bit off. This is relatively in the middle, the biggest impulse.
Yep.
This one is relatively in the middle. These are all slightly what you would call right translated. So they're the right side of this middle mark. Now, we got one right translation here, but I don't think that this is not a full peak based on Elliott Wave theory. And what I think is we're going to get a left translated one of these cycles, but which is a right translated this big cycle. So
now, why would you say left? And why would you say left translated for the last sort of third circle there? I forget the terminology with those 3 circles there, but why would you say a left translated?
So mainly, again, because of this larger circle here. So if I'm going to make this one a little bit more dominant, and then if we remove these, you can see if we got our wave 5 peak up here, so this entire, say, cycle starting from, let me get where's the arrow? Here we go. So let's just say this is our dominant cycle. It ends about here, which would be a slightly right translated.
Gotcha. Okay.
Yeah.
Yep.
So yeah, and it at least gives me a little bit more depth into the rhythm of things. And I think as we go into the Elliott Wave portion, how this all sort of ties together makes a little bit more sense.
Well, I always say what's helpful on my channel is when you start, like, you can't. One of the struggles I have with people who I call 4-year maxis is I feel like a lot of people are looking at one chart in a silo environment and saying, look, we have the halving every single time. This is what it does. And look, you're not going to get an argument from me that prices do respond similarly around the halving date. There was no argument there. But I think that it is naive, in my opinion, to evaluate that one chart in a silo environment and not evaluate multitude of charts to kind of formulate a hypothesis in terms of what has happened in the past and what could happen prospectively moving forward. Would you agree with that?
I do agree with that, and that even ties a little bit more back into the whole variation thing. Is like you really kind of just need to expect the unexpected. You really shouldn't assume anything is going to ever really be the same, even if there is some sort of cyclical rhythm. And then, as you get more into these studies, it tells you very specifically as people recognize these cycles, those cycles tend to break because the market is designed to inflict max pain, as we've seen. So,
Yeah.
yeah, I just don't think it's as simple as the halving and then it all works out for everybody. I think that's kind of naive to think.
Yep. Yeah, and that wave four expanded flat correction to your earlier point back on the 2019 correction, I would echo that sentiment for the expanded flat wave four correction. When it started, when we had our correction initially in the summer of 2021, and we started breaking 65,000, heading up towards 70. It's like, well, here we go. This is the fifth
Mm-hmm.
wave impulse, and I'm ready for this. And I got thrown off. I definitely got thrown off by that correction for sure.
You aren't alone. That was by far the worst trade I've ever made. I did really well and nailed the timing over here. By the time I got up here, I was stubborn. Yeah, I didn't realize. I was always, first of all, at this point, I was kind of more a subscriber to things like Dow theory, where you're just kind of looking for higher highs and higher lows. So once that higher high was made, I was crazy bullish and never really heard of an expanded flat at that point. But yeah, which actually kind of brings me to some of these other points of the chart is, yeah, I mean, people don't really realize that corrections can create this higher high, which really threw me off. But the positive part of that is um, we have a good idea that this was indeed an expanded flat. And, expanded flats tend to appear on wave four placement. So that gives us a little bit more hope. And then, I just threw a couple other diagrams up here for, like this one I thought was kind of fun. It's like, how do you argue with that right there? You know what I mean? The second wave, I'm sorry, the C wave of the expanded flat is 5 waves down. And then I mean, this is as textbook as it gets. So, and then, yeah, the reason for this other chart over here is, this is the scariest scenario for me is if this turns into a very complex correction and we get something like, like this thing over here. How brutal is this that if we go
Yeah.
into we come up here, we don't make the higher high, and then we go into a triangle for like 2 years. Brutal, brutal, brutal.
That
So,
would
we talked Max Payne here. This is Max Payne.
Yeah, that would be max pain. And I always say on the channel, expect the unexpected with probabilities. There is literally a probability for everything. I know I've spoken to the fact
Mhm.
that what if we triple top? Because essentially, even though that was an expanded flat correction, we only went 5% higher on that B wave. It really
Mhm.
was a double top, right? Essentially a double top. So what if we triple topped? That's certainly a possibility with
Yeah,
what you have drawn out here. That would be very
yeah,
painful.
exactly. And then, I mean, think if we did get this triple top here, I don't think anybody would be buying down here for the most part. They would be in
No.
absolute panic, expecting the lows to be taken out. So, yeah, it's a real tricky one. Let's hope that that's not the case, and we get the sort of 5 wave structure that we're looking for ending here. Um, and then this is another thing that I was kind of unsure about myself, and is one of the big things that I'm not totally comfortable with here is you know just like the previous one, I was sort of expecting where I had a channel drawn here, and I'm expecting this to sort of touch the upper boundary of the channel. I really do kind of expect that touch up here or somewhere for this wave five finale. But like you said, we did get this double top here, and it is within the 1, 2, 3 overthrows a lot. But then again, this would be 2 and this would be 4. So I don't know. It's a rather confusing thing. I've been trying to sort of count it out a little bit differently recently, um, with something like this was an unusual one where I have to actually turn these back on to something a little bit larger. We'll go with these. But so now I have this one labeled specifically as an ABC correction. And then this is a strange one here too. With this was also an ABC correction, but it's a bullish correction because ABCs are kind of always corrective behavior. And then we get one final ABC here, and then this is actually our termination of the wave four. And if this was the case, this is still valid. I've heard other Elliott Wave analysts say that the length of this to here should really match this. But I don't know. And the reason I say this is because, if C waves should take you down to the 1.618 Fibonacci, and you got that here and over here. And then that same sort of behavior actually works up here. So I don't know. Some Fibonacci ratios line up in an unusual way where this would be my alternate count if we're not as far, if this isn't the 1, 2, 3, 4, 5. In this case, I'm still in a wave 5, but I'm in a wave 5 at a much earlier point where we may then get something like this, which I don't favor this setup. I really favor the original, which is going to be, which is going to be this guy, which I believe, we're very much on the same page on. And there seems to be a growing number of analysts out there who are sort of subscribing to the wave 5 theory. So I think, based on time, we still have a really great chance of seeing this come to fruition, given like the timing. It's relatively on point.
I agree that there's been, I've seen a few more people sort of subscribe to it, although I still view it as the minority opinion. I think, and correct, and tell me if you feel differently, but I think it's important to, like you're doing, to try to count these waves differently to gain a different perspective, because at the end of the day, what are we doing? All we're trying to do is we're trying to interpret the past and current price data to come up with what we think is going to happen moving forward, right? It's about probabilities and not certainties. It's one of the things I really try to hammer home on is nor you or I know what's going to happen, right? We don't. We have absolutely zero certainty, but we're attempting to interpret the data and come up with a rational and justifiable view in terms of what we think is going to play out. And to this fifth wave point, I do, and I want to see if you feel similarly. Again, I do see a few more people sort of catching on to this idea and sort of gravitating towards it, but I still view it as a huge minority within the general populace that is crypto Twitter and YouTube, which is a small population.
Yeah, I'm in agreement with that. And it's kind of funny, I get labeled sort of moon boy and things like that for going with this count and expecting a peak before 2024 and before the halving. But I like going against the grain. I like being a contrarian. I like to go by the Tony the Bull thing because it's my personality. But the truth is I'm bearish when I have to be, and bullish when I think I'm gonna be rewarded for that. And I was skeptical back, say, April that and thought we were going to pull back. We got some pullback. But yeah, I just think, again, in the overall grand scheme of things, people just, the way people are writing off our Wave 5 idea and basically saying we're foolish because it can't happen without the halving, just gives me even more confidence every day that there's a strong possibility. And I guess finally, the way I've sort of described it to some of my followers in Telegram was I expect a chase. We're at 30 grand now per Bitcoin. That's pretty expensive for Bitcoin. And people are probably not going to be fully confident we're in a bull trend until, say, $50,000. At that point, they're going to be chasing very expensive prices higher. And yeah, I just see that that's how we get there.
I agree with you on the 50,000 target. It's interesting you brought up $50,000 because one of the things I brought up on my channel a couple times, I had a conversation with my mom. There isn't anyone I don't talk to about Bitcoin and crypto. Had a conversation with my mom and I said, "Hey mom, what do you think about the market right now? What are you thinking about Bitcoin?" CBG, I'm not interested in Bitcoin until it's up at 50,000. That is the retail emotional sentiment. Nobody's interested till we start getting up to those higher price levels.
Exactly, exactly. And then at that point, you're paying a super high premium for it. And I think, that also speaks to why altcoins come back alive too, because let's say Bitcoin's at $50,000 or even it sets a new high above $68,000. The realization that everybody's saying, I can't afford that easily anymore. Like, that's the reach for most people, even some businesses and institutions that's even starting to get into out of reach per coin. So yeah, I see that kind of reviving altcoins because they're going to start looking for opportunities in the next Bitcoin to go to 50,000, 70,000, or whatever. And again, once these things get rolling, as we've seen, they go. Like you said with the 20K. You thought I myself, I completely agree with you. I thought we would hit 20K. Oh, we're going to get a pullback and we're going to consolidate. Nope, we blasted through it. So why did people think that we're just going to like hang out here forever? Right? We're probably going to blast right through those all-time highs and keep sailing.
Yeah, the market is going to do what fewest expect. I laugh. I find it comical when I see on YouTube, because I do pay attention to other channels for various reasons to gauge the market sentiment. I find it hilarious. I call it a TV or movie script when people have it perfectly laid out on terms of what Bitcoin's going to do this year, 2024 and 2025. Like, are you kidding me?
Yeah.
Yeah.
Yeah. Don't you wish we all had that roadmap and we could just sit back and print money? So,
Exactly.
yeah, I,
I,
I agree.
I would just
Yeah.
buy a few islands and be sipping my margaritas. It would be a fun time. Um,
Yeah.
so beyond all of this cycle theory, which is really interesting, it's something that I want to get a lot more familiar with in terms of time cycles. I think that's something that would benefit me personally. What other unique charts do you look at? What other sort of charts do you have that you could share that perhaps would be new for our viewers here?
Yeah, so a big thing I'm looking at right now is the Bollinger Bands, but so interestingly, certain tools you can set for multiple time frames. So here you can actually see I have two sets of Bollinger Bands on, and very specifically, what I'm looking at here is I like to see where other time frames are, lower time frames. So, for example, the weekly or the daily is in relation to this monthly Bollinger Band. Interestingly, too, you can kind of see. Actually, this is a poor chart to do this with. Let me
And,
try
may,
that
and
over
maybe and
here.
maybe super quick before you start delving into the Bollinger Bands, maybe it would be helpful for some on the channel just to briefly describe in layman's terms what the hell is a Bollinger Band? Like, what are we actually looking at here?
Yeah, absolutely. So, this is a topic that's actually kind of important right now, which I'll even bring up that as well. So, the Bollinger Bands created by John Bollinger in the 1970s or the 1980s. They are a volatility measuring tool and a band breakout system. So, in terms of the volatility measuring, you can kind of see when there's these periods of tranquility and low volatility, you get this narrowing of the bands. And interestingly, on the weekly time frame, we are actually the absolute lowest in Bitcoin history, which I had a tweet blow up over. But as you can see, it's even less volatile right now from here. So this is absolutely uncharacteristic for Bitcoin. And here you can see this lengthy sort of phase that resulted in it. And then look what happened after. There's no real guarantee with a volatility measuring tool that of direction. But what it's really helpful for is when you do get this narrowing, and then this Bollinger Band width tool starts to turn up, you're going to get expansion, and these Bollinger Bands expand with the volatility. In terms of it being used as a breakout system, you want to look for the Bollinger Bands to actually break up out of the upper band or out of the lower band, and that's usually a signal that a strong trend is developing, and you can do something what's called riding the bands. And then, you'd take profit once it closed back inside. Usually after you take the buy signal at the upper band, you would then place your stops and move the stops trailing upwards under the mid BB. So if you had taken this trade right here, actually, you'd been in a great trade all along and you'd get stopped out right here in profit. So really excellent full trading system, gives you tons of different signals. Not the greatest for direction, but when combined with other things can be very helpful. But again, so now with the monthly here, I like to turn it on in multiple different time frames. So you can, I'll show you how what the setting actually looks like. So you can tinker with that if you'd like to, but you can change this to everything, anything you want. And what that does is, so I'm actually on the weekly here, but it's showing me a 1 month Bollinger Band. And I'll just actually switch to the weekly. The monthly, so I can show you the importance of this. I am specifically waiting for this little tiny basis line here. Ooh, excuse me, I just shut my screen. To right here to get tested at 28,547. The moment that gets tested, I plan on taking a position, not financial advice. And the reason being is this is really healthy price action in terms of the Bollinger Bands. You get the breakout above the mid BB, you get the retest, and you get an uptrend. Here, we did not get the retest. And I think that's why we got all this later. So this is very healthy. I'd really like to see it touch 28K one more time before we then make it towards the upper Bollinger Bands, which are located at 46K. And historically, all you need is passing above this, and you touch the upper bands within the coming months. So very realistic target, 46K based on this. And then again, using this on multiple different time frames, you can get all kinds of information in terms of where things are. I put this one on specifically because this is actually one of the more dangerous signals I'm actually looking at. On the 2 month, we're actually kind of potentially getting rejected from the middle BB. So some of that happened over here. Maybe we get some type of spike. I don't know. But so I'm still being cautious on everything. But overall, things are looking really, really good. And then the last thing I'll sort of show with this is, so now this is BTC USD, Bitcoin trading against the dollar. I sometimes look at really unusual, charts featuring.
I've been trying to do the same
BTC
thing,
USD.
looking at different ratios.
Exactly. So this one, I put DXY up against BTC USD. It inverts the chart, but you can see here we're above that line, that critical line that I just was saying that I was a little worried about. So not bad on the 2 month. We're well above it with several closes on the 1 month. We retested. Every time this has happened, we've made a huge move up. So again, I have lots of evidence that we're going to make a big move eventually.
Right.
It's just a matter of when. Yeah.
Yeah, and
So-
the interesting thing with these Bollinger Bands, and you kind of hit on this with the volatility as well, crypto is not a non-volatile asset, right? We get a lot of volatility in Bitcoin, especially the altcoins. And the fact that I think it's on the daily, the Bollinger Bands are as compressed as they've ever been historically. You have that volatility indicator on the weekly that's at a historic low. And then when I take that and I couple it with the fact that the stock market and Bitcoin are positively correlated, meaning they move in the general same direction. I know you shared a chart recently that spoke to this. There's been a little bit, I think it's been since April, there's been a little bit of a divergence where the stock market, like the S&P and NASDAQ, have moved up while Bitcoin has just sort of stagnated. This sort of lines up with the idea that we're due for an explosive move, right? Due for an explosive move. And so if the explosive move is indeed to the upside, basically Bitcoin would catch up with that positive correlation narrative that has historically existed, that while we've lagged for a few months now, we should start to catch up in the coming weeks here.
Absolutely. And I was trying to actually just pull that chart up specifically to take a peek at the correlation between the two. But yeah, I'm basically thinking we're about right here. And right after that point in the NASDAQ, you can see it really sort of Bitcoin really took over. So there's
Mm-hmm.
this weird sort of disparity here, and I mean it looks incredibly similar to here,
Yep.
and it's based on you just look at the correlation coefficient, which oops keeps going that
Oh,
up.
we're starting to get real nerdy now. We're getting into a lot of math terms. All right. Love it.
That's right. But yeah, exactly. I love this stuff. So, everybody's like, oh, Bitcoin's not following the NASDAQ. This is as strong about of a correlation as it gets. And throughout history, it's only gotten stronger. And when it does diverge, it's not even diverging that much anymore. So, yeah, this is a very, very strong positive correlation with the NASDAQ right behind it. And it's actually at this point, even though it was dipping, this is now strengthening again too. So you can see when these things strengthen and it returns to strength, it's very good for Bitcoin. So
Yep.
yeah, it's just, again just a matter of time, I feel.
And so that kind of leads into, in terms of a matter of time, what are your expectations, your own personal expectations for this Wave 5 topping in terms of price levels, timing of a top? What is sort of your current ballpark estimation for those? I've sort of shared mine on the video that you were kind enough to share in your newsletter. I published a video last Wednesday, kind of speaking to that.
Yeah, this is always a tough one because targets, people really like to hop on those, and if you get them wrong, you live and die by it. But I'm willing to definitely make some targets and timing and stuff like that. I think it's worthwhile and gives you some expectations in terms of validity and if your expectations are now invalidated. But I'm looking
Hmm.
for, I would say I like the Fibonacci, the 1.618 Fibonacci from this wave three. I think I have it a little bit high here, but so I actually want $161,800. And now this is, since you're a math guy, I hope you like this, is $161,000 800. I'm sorry, 161,800 is 1.618 of 100,000 Bitcoin.
Yep.
So I feel like bizarrely, um, the human brain, for whatever, is just going to gravitate towards this mark. And then when I sort of look at, you mentioned trend angles when we were sort of preparing for this, and I think that's
Yep.
a really smart way to look at things as well. And then I also like, some of the parabolas and stuff that people like to draw. But, if you take this one and duplicate it here, and you were to put it right under and kind of follow the same path, I mean, that takes you pretty good to my target. And, I'm not a big fan of bars patterns because, anybody can do this and kind of just
Yeah.
draw something in. But like this, it fits, it fits. And I just see that as a really logical target in terms of price, 160. It's really not that high from here, too. People like but Bitcoin's done like 1,000% here, 1,200% here. I'm looking for 400%. That's not that bad for Bitcoin. It did it over here. This was well, not 400%, but this is like 330%, 350% or something like that. So to imagine Bitcoin traveling, I think this is end up being like a full what, 900%. I guess that's pretty decent though. Anyway, still diminishing returns. That's a lot less than here. I don't think that this target is outside the realm of possibility, and I very much do think it happens before the halving. I had initially really wanted something ending sort of before the year, but I'll even extend it maybe into like January, February is my guess.
A couple thoughts there, and thank you for sharing that. Really good analysis there in terms of what you're thinking. I think you clearly laid that out. Couple different thoughts. I think that I think some people find it unlikely that Bitcoin would hit that dollar value because they look at the dollar value of $161,000 and they think that's impossible. What I try to share with people is think about what the market capitalization would be. Every roughly $50 to $55,000 of Bitcoin is 1 trillion. And then ask yourself what
Mhm.
some of these tech companies are valued at. So at $160,000, Bitcoin is roughly a $3 trillion valuation. That's small compared to when you think about what the asset actually is, what it's going for years and a decades out from now. It's pretty damn small, right? So that's
Yeah.
one thing I would offer. Um, the other thing, to your point, the way I kind of use bars patterns, and I've seen them used so inappropriately on Twitter and on YouTube, is to give a general idea of if this plays out, and let's put it in realistic terms, but if it plays out, this is sort of generally what we might expect, right? And the last thing
Yep.
that I touch on, where you drew this appropriately, and I don't know if the audience picked this up, I hope they did, you're drawing this fib extension based on the wave 3 top, which is that
Yes.
64,800 area, not 69, 64.8.
That's right. Yeah, exactly. And again, that's really kind of just based on what you said was the Elliott Wave. When you're taking these measurements, it's always from wave to wave, and this is would not be a correct place to take it from if it's valid. And one thing I didn't touch on this whole time, but just this is really important is for all the people who are waiting for the 10Ks or are doubting some of what we're talking about. This right here is really pretty much the most important line in the sand. As long as this is never invalidated, this is very much still in the cards. Just, when it happens, I don't know. But this is a Elliott Wave rule that 4 cannot go into 1. And I personally think this exists psychologically because, traders, they look and they're like, oh, I want to buy this support right here. It makes sense. But it never makes it. Smart money goes in and starts buying a little early, and it never reaches the zone everybody wants to buy in at. So, yeah, I feel like we have the ingredients for a really good rest of this year, potentially into 2024.
Yeah, and I'm glad you touched on the invalidation point because everything about this Elliott Wave structure, right now, it looks textbook. Right? There's nothing that's been invalidated. Could it be invalidated? Absolutely. Right? There's a probability for everything. This whole thing could fall apart. We could go to 5 or 10,000. There is a probability for Bitcoin to go to 5 or 10,000. There's also a probability that a lot of stocks that you own could also go down 95%. There's a probability for everything, right? All we're trying to do is come up with what we view is the most likely scenario by all of the analysis that you're showing here, which is where we add value in this space. And I really, really, really appreciate you sharing your views. I want to see if there's any questions here. Would you have time to stick around for a few minutes just to see if there's any questions for any of us?
Yeah, please.
Sweet. So if anybody has any questions, feel free to drop them in the comments here. I'm going to go through and see if there are any questions here. Kathleen, please be the enforcer on the thumbs up. Would appreciate that very much. Chris Daly is asking, been here since 5 p.m. When XLM to $25? Don't know that that's going to happen. Don't know that that's going to happen. Okay, here's a question here, and this kind of gets back to the first subject we were talking about surrounding market sentiment. Is confidence low, or are there stagnated prices due to high interest rates? Do you want to tackle that one first?
Yeah, sure. Definitely that's holding things back. Actually, interestingly, I sat and listened actually, I want to say you popped in there for a minute as well, listen to the Fed rate town hall that was held earlier today.
I was there.
And Caleb Franzen had some really interesting comments and was sort of stating part of the reason why the stock market is doing so much better than crypto right now is their earnings ratios and stuff are doing well, and there's especially like companies like Nvidia, which are blowing up right now. There's reason for people to have additional confidence in those stocks, whereas that doesn't quite exist in crypto right now. You do have this sort of recession and Fed rate hike sort of environment. But truly, I think a lot of that's already priced in at this point. I read someone else today say Powell's comments were mixed, so people are going to kind of interpret it the way they want. I personally started as more dovish and thinking that he's going to start pulling back
I
and being less
agree.
aggressive, but
I agree.
yeah, but others saw it the other way. So I don't quite know. What's your thoughts?
Yeah, the other thing, I would agree with what you said, and I did hear Caleb's comments. Now that you bring that up, I recall him saying that. The only other thing I would add on to that is we have to consider when will it truly be a very risk on environment. Um, I don't think that the stock market has to hit new all time highs for it to really be risk on, but I do think, and the Nasdaq is setting up for it before the S&P. I think once we start seeing new all-time highs in the Nasdaq and the S&P, which is my view over the coming months here that we're going to see, it really is increasingly going to turn into a risk-on environment. Everything that you heard, popular narrative in 2022 going into 2023 was wrong. There was not a massive crash in the stock market. We moved up substantially, and a lot of people probably missed out on that from fund managers. So I think once we start creating new all-time highs in the stock market, that's going to increasingly open up the door to FOMO, right? To people wanting to get into the market, being a risk on environment, and that opens up the door to crypto. There's nothing more risk on than crypto. So there's going to be money increasingly flooding into crypto.
Agreed. Yeah, and again, the way that these sort of everything sort of behaves in its own way, like we showed with the Nasdaq example earlier. It's just a kind of a matter of time to see if it follows that same sort of correlated behavior, and history kind of has proven that to be fairly factual. I mean, correlations aren't causation, and correlations can always change at any time, but they're there for a reason, and we study them for a reason. So the correlation breaks and we have evidence of that, I fully expect crypto to respond to that sort of whether it's a break of all time highs or not. I'm not sure if that's necessary, like you said. I also think that the Dow starting to look better is a really positive sign that people are going to start looking at. Tech stocks were super oversold. And then you have the AI boom, so I think people are skeptical. But when you start seeing money rotate into other sectors like industrials, which the Dow Jones is heavily weighted around, then you start to get a little bit more sign that the economy is recovering and the business cycle is healthier than anybody expected. So yeah, just like you said, that crash never came. Weirdly, it seems like Powell and the Fed were semi-successful with the soft landing so far.
So far, so far. We will have to see how next year plays out. I'm glad you hit on the Dow Jones. That's something I've been focused on the past couple weeks on this channel. Is last I looked on a monthly chart, we're really pressed up against some major resistance levels that we have the opportunity to break possibly this month. So I'm glad you brought that up as well. That the Dow Jones is looking a lot stronger in the past several months as well. Okay, ETH hasn't had much volatility for a while. I don't really have anything to add to that comment. It kind of touches on the fact we spoke to Bitcoin. Haven't looked at it specifically for volatility. I know it's stagnated around that 18, 19, under $2,000 level. I guess I would just echo the similar comments that I had for Bitcoin. But if you want to pull up a chart and take a look at it.
Yeah, this is pretty much very similar. A lot of these cryptocurrencies right now are sort of in the same place where this is the lowest volatility that they have ever seen in their entire history. So,
Look at that volatility there. Yeah, on the right there.
yeah, it's like completely dead at this point. And it's even lower than this point over here. And I mean, look at this move that we got after this. It seems like it's worth the wait. 20 if you get 20,000%. I mean, granted, I never think we're going to see something like that again. But if this were to fill out, which is my primary sort of another 400%, I'll take it. Taking Ethereum to almost $9,000, a 400% rally, that doesn't seem unrealistic when you have a rally, 4,000% rally here. And again, what was it, 20%, 20,000% or something like that from down here. But yeah, this isn't out of the realm of possibility. You get that same sort of wave count structure here, a little bit different. I don't know if this one was an expanded flat. That's a little ambiguous for me, but yeah, you can really see. And then another important part of this is this volatility has been going down and compressing for 6 years. It's not going to take much to even break out volatility wise. So, yeah, really interesting stuff. We're going to see an explosive move in this market when this all finally, this period, it's the calm before the storm, I keep saying.
It literally is the calm before the storm. Like if you've been on a beach and you knew there was a storm coming in and it's eerily quiet, and then that literally is the calm before the storm. I don't know if that's where the name came from. Perhaps that is where the saying came from. But related to Ethereum real quick, I actually want to get your thoughts on this because I've shared my thoughts, and I can share them with you if you're not current on that. But do you think that during this blow off phase, once we get into this wave five, if the wave five plays out similarly to our expectations, do you think at any point Ethereum will flip Bitcoin's market cap? And I'll share my thoughts with you. I'll let you go first and then I'll share my thoughts.
So I don't. I don't think it's with like, you know, first of all, never say never type of guy. Anyway, I think I don't even want to say this out loud, but like Ethereum technically does have a little bit more utility than a Bitcoin, but um, realistically, yeah, I don't. I'm gonna get roasted for that one. But I believe in Bitcoin as a store of value. You know, non-sovereign money, hard
Absolutely.
money,
Yep.
lots of things. And to me, also, Ethereum carries a lot of risk that Bitcoin doesn't because of, you know, the involvement of, Vitalik
Mm-hmm.
and just the whole beginning with the ICO and all that. So
Yep.
yeah, it's I just don't think so. But I guess anything is possible in this industry.
So my view is, I've been following this ETH BTC chart really closely and the compressed price action we're getting on there. I actually think that it's very possible for Ethereum to flip Bitcoin this quote unquote cycle or during the wave five. But I think when Ethereum, if that does happen and it does flip Bitcoin, it's going to literally be a 1 day event. Maybe it goes into a second day. It's going to be very quick. It's not something that's going to, Ethereum isn't going to flip Bitcoin for like a week or a month or several months. That's not what I'm talking about. I'm talking about Ethereum flipping Bitcoin temporarily. That I could see happening.
Got it. Yep, yep. And I mean, I know has it ever done so at this point, or did it just come close?
No,
Um,
it's never flipped. It has never flipped, and I don't even know how close it has gotten. Like what percentage, how close, if it's been
mhm.
within 10% or 20%. I'm not sure.
Yeah, I'll have
It's
to
a good
research more
question.
into it myself.
Yeah, that's actually
Yeah,
worth taking a
and
look into.
I know XRP did some flipping too, but I think it might have only flipped Ether. I don't know if it
It
actually
only
flipped
flipped. Yeah,
Bitcoin momentary.
it only flipped Ethereum. Yeah, and if you look at the market cap between XRP and Ethereum, I think what people, and I'm actually a supporter of that project, but I tend to live in the world of realism, and so what I would say is for XRP to actually flip Ethereum again, it has to do a multitude of a price rise relative to Ethereum. I just don't see it as being likely, not at all.
Yeah, me either. Yeah, I think as much as I see a lot of strength in XRP, yeah, I just don't think that anything ever really catches up to Bitcoin and Ethereum at this point. The whole first mover advantage thing really does
Yep.
have a lot of value. And then, I mean, look, these are networks. There's real adoption out there and usage. So you can't just stop those things. It's not like it was AOL or something like that that goes away.
Totally agree. All right, let's see what other comments or questions that we have here. Feel free to drop those in. Um, Someone is commenting that they bought high when we were talking earlier about emotional sentiment. Someone at least bought near the top. Hey, it happens. Learn. I think you would agree with this, Tony. We've all made mistakes, right? No matter how experienced we are, how novice we are. The most important thing I think in life, no matter what it is, you learn from it. You move forward. Wouldn't you agree?
Absolutely. When I first started studying the CMT course, like the first thing they really hammer home is losses are going to occur. It's sort of how you manage risk and emotionally deal with all these things and get back into the market. The market's never going to be easy, or we would all be rich as can be. So it's meant to inflict pain. It's meant to be difficult, and it's meant to take your money. So don't feel bad. Um, and I also know a lot of some of the greatest traders out there. If you read the stories, they lost all their money before they ever started to do well. Sometimes it takes a major loss for you to start opening your eyes as to what's out there, and then start to take risk in your capital a little bit more seriously too. So don't feel bad. It's growing pains. We've all been there. You learn from your mistakes, and when you learn from your mistakes, the market can't beat you.
Absolutely. I really appreciate that comment. I certainly agree with you there. Tony, just to let you know, you're getting some love in the comments here. A lot of people really appreciate that you're on. I know you can't see the comments, so just wanted to share that with you.
Awesome, man. Thank you.
Greg is saying, how much liquidity would it take coming into the market to pump it that high? Now, I think what he's speaking to is, I know when you had shared your fifth wave, you were speaking about 161,800, which is easy to remember. Guess a two-part question. Where would liquidity, I'll add on that, where do you think liquidity would come from, and how much liquidity would it take coming into the markets to pump it that high?
Really interesting question, and my answer is probably not going to be within what anybody expects. So, I'll answer the question first, though. So, liquidity, it's out there. People are kind of waiting on the sidelines. I think that a lot of the people who bought crypto and may have sold, they're literally just waiting to buy back in. So that's one. I think that there's a lot of liquidity that could be unlocked from participants like BlackRock, Vanguard, and all of them sort of entering the fray. There are literally trillions and trillions of dollars under management. Even if a fraction of that sort of comes into Bitcoin, there's your sort of answer. But the part that is different than what most people think is you truly don't even need all that much liquidity coming in for prices to go up. So this is an unusual perspective on things, but markets are basically just order books with bids and asks. So let's just say there's really no Bitcoin on exchanges, and the current price is $30,000 a coin, and someone comes in and buys up all the remaining orders for $30,000 a coin. So what happens is the next higher price is then what's on the order books. So if someone comes in and bids up the price of Bitcoin and its market cap goes up. You don't actually need trillions of dollars to come into Bitcoin. You just need a couple, people to FOMO and start bidding up prices absolutely ridiculously. A great example of this is back in 2017 during the whole major crypto bull run where all these altcoins were going nuts. I saw some altcoins do 100,000% gains. I definitely don't think that this was because billions of dollars were coming into these things. I think it's because your average Joe doesn't know how to price speculative assets, and they're like, I just got to buy this at whatever price it is because it's going up. And when you have an environment like that, and you have people way underexposed and bearish sentiment and the most shorts that you've had in recent history, you have the recipe for something incredible where price could move very, very quickly, and it's just by clearing out all those orders in the book. So once you cleared out all the orders from 40,000, 50,000, 60,000, the orders start to go upward and higher and higher. And again, it's all people entering numbers that don't know what they're doing, and those are the ones who buy the top and get sold onto, unfortunately. But that's just the way, again, how markets work. So yeah, it doesn't quite need the money coming in that people sort of think, but I still think that just takes a little bit of a catalyst, and you get money coming in regardless. So between those things, yeah, it seems easy to me for it to reach 160K.
Yeah, and I think you actually explained that really well. I think some of the dynamics that you explained with how order books actually work, I would venture to say that 97, of course, I have to be specific here as an actuary, 97% of the population really doesn't understand how an order book works. So I think you explained that very well. You don't need trillions of dollars to enter the market to drive the price up. Plus, the other aspect is once you have Bitcoin's price sustaining certain values, especially once it breaks its all-time high, a lot of that capital is going to rotate into altcoins. It's going to go into the mid caps, the large caps, the mid caps, and then the small caps.
Definitely. Yep, that whole sort of rotation happens during that phase, and we touched on it earlier. I think again, once people start to see that Bitcoin's price has become a little bit more out of reach than they expected, they start to roll that money into things that are more reasonable. I think that's why the XRP did great in 2017. It was the first coin you sort of saw that was under $1, and everybody just
Yep,
went and bought it all, and
I
boom, it was
agree.
$3. So
I
sometimes
agree.
that's all it takes. It doesn't
It's
have to be
cheap.
anything.
It's cheap. It's a penny.
Yep,
I'm going to put everything I have into it. That is market
that's
psychology.
right.
It really is. You could, and I'm not saying this about XRP, but any other project, if a project is not cheap based on its USD value, you could buy something for a fraction of a penny that is complete garbage, and you could buy something valued at $500 per token, and it is an extremely great project to invest in, right? There's more to it than just what a USD value is. But again, it plays into psychology. This is cheap and this is expensive, which is not how it works at all whatsoever. Um,
Yeah, and I think a lot of people fall into some of those traps too, where they can, you buy a crap load of one coin and you sort of tell yourself, well, if this reaches $1, I'll be, a billionaire, I own 1 billion in Bitcoin. So it's easy to do the mental math and like it just gets your hopes up. So yeah, stay
yeah,
away from stuff like that.
completely agree. Let's get to one more question. And this is coming in from Hallie Fire 101. By the way, everyone, thank you for your comments. I do see them all. Just for time's sake, I'm not going to read them all, but do appreciate the engagement very much. Um, so Hallie Fire 101 says prices seem to be more affected. Now I'm going to be really interested what your thoughts are here, and I'll share mine. Prices seem to be more affected these days by more external events. Thrash, I guess, ever before, I think is what he meant to say. For example, the SEC war can cause prices to drop. BlackRock coming in causes prices to go up. Do you agree?
Huh.
We might, we might,
Yeah,
we might,
I think
we might disagree here. I'm curious what your thoughts are. Go ahead.
so. Yeah, I tend to think it's part of low participation that we have low participation, low volatility, low volume. So I think when there is some sort of news that people can sort of like lock in on, because everybody's always looking for a reason to why something happens. A lot of times things are just hitting support, resistance, momentum's running out, but these things happen around the same time as news events, which there's that quote that is show me the charts and I'll tell you the news. And I think there's some real truth to that. I think news tends to occur at important moments on the chart. But yeah, I think it's maybe having a little bit more of effect right now, given the environment. Overall, I tend to actually not think it has as much impact. And I don't mean this at all in like a negative way, but maybe you haven't had quite as much time in the market. But I mean, I remember situations like um, Musk announcing that Tesla would be accepting Bitcoin payments, and it like absolutely just went nuts. And other just I can recall a lot of moments of sort of events that had negative impact on things. A really great example of it was back in 2019. People were sort of more averse of altcoins, and it was because Binance was shutting out U.S. investors and opening up their Binance US.
Yep.
And at that time, I was even a little bit more bearish on altcoins than I should have been, and I missed out on a lot of upside because of that. So again, this is why you look for those sort of sentiment things we talked about at the beginning of the episode, because they can help you understand when you should be having those emotions, and it's actually it's not now while it's at lows. You want to be nervous about things and skeptical and sell when it's high, not when it's low.
Exactly, doing the opposite of the herd mentality. Yeah, my investment philosophy has changed dramatically over the years once I began reading charts. Yeah, to your point, show me a chart and I'll tell you the story. I believe that news follows the charts and not the other way around. So oftentimes, what I find is there's something pivotal. Like right now, I'll just give you an example. We have Bollinger Bands, very compressed on Bitcoin at historic levels in terms of what that looks like. Volatility is historically low. We're sort of waiting for price to choose which direction it wants to go. So it wouldn't surprise me. It wouldn't surprise me to get some sort of positive news catalyst with a Bitcoin ETF, right? But in that case, to me, the news is following the charts and not the other way around. That's how I look at it.
Yeah, that's a great point, because, and then, if you think about it, if we got some sort of approval, they're talking about September as some of the deadlines and stuff all the way through the end of the year. I mean, that's when the magic would really happen if it followed the same sort of, individual wave count here. We would be right there. It's right here. We would be in that wave three. Things would be really strong, and boom, we moved right up to the new high here. So I definitely think this would be a perfect example of the news actually following the chart. So that's a great point you make, and I tend to agree.
Excellent. So, look, I know that I have appreciated you taking time out of your day to come on the channel. I know that everyone in the comments here has really appreciated the time that you've spent kind of walking through charts and your thoughts on the market. It's nice to hear somebody else's perspective. I think it added a lot of value to the channel. I would love to have you come on again at some point down the road here. Um, Perhaps before we sign off, maybe just one more time you could share with everyone where they can find your newsletter, as well as you said you have a Telegram group, and you can just spend a moment talking about those custom indicators and how to get those again.
Yeah, thank you so much for that. So the big thing for me, which I really am pushing, is my newsletter. If you really kind of went back through it, you would see that a lot of things I was saying really kind of, were pretty accurate. Calling for certain corrections to happen and when. We rose right after this, somewhere to the top median of the median of this channel where we are right here. Called the correction right at the Fibonacci. Some really good information there. And then again, what I like to do, I like to actually say, as I'm a content guy, I have a media background. I used to make websites and things like that. I tend to think websites are dead. So it's kind of weird that I have a website, but this website is actually kind of piggybacks on my newsletter. The newsletter is the priority. And then I send people to the website if they'd like to learn more. So, you want to learn about a particular tool, you can do so. You want to find, how a Japanese candlestick is going to perform. I have, the largest database out there right now, and you can find out really just about anything, how to trade it, what to look for. Is it a continuation pattern? Is it a reversal pattern? And then if you do sign up to the premium edition of this, every issue is free. It ends up kind of ending sort of halfway through, and then the rest of it goes to premium subscribers. But premium subscribers also get my custom tool. So this one is Ethereum. Literally, the Trend Wrangler tool nailed it as resistance, and then we have the flip to support. And at this point, this is actually rising over here, and you can see that the trend is changing. My Raging Bull, here I'm actually calling it should light up within the next few weeks, telling us a Raging Bull market is here. It has lit up since, so that's a great sign. That could be putting us either in this point or here. And then finally, my Bitcoin bullseye, which I even say here, I plan to stay long until the Bitcoin bullseye triggers
I mean, it's been
when I will
spot on.
begin
Just
selling
just
my,
look at the chart. A kindergartner
yeah,
could look at that and say what it's saying. I mean, that's beautiful.
that's right. Yeah. So, and I, mentioned I like to look at it as you start selling, you start scaling out because I missed the top a little bit over here. It's arguable that this could be the top, and then obviously it fired a little bit early. But you know what? Before the signal, even before I developed this, I was already buying here. I was buying here because I started to see oversold levels, and we got a huge bull div building from here. So I once I built this tool after, I was super comfortable with the fact that it triggered a little bit early because I knew from other technical signals that it was an okay time and that it was going to eventually turn around. We just got this weird sort of continued push down while there was buying. So, yeah, you get these tools by upgrading to a premium membership. And then you also get all the additional charts that I usually lock away, which I change up every week. Sometimes I lock away the altcoins, sometimes I lock away the macro stuff. And then I always give some sort of lesson at the bottom here. So in this case, I'm sort of explaining how inverse head and shoulders form from Elliott Wave. Your left shoulder is 3-4, and then the head is the 5. And then you start your 1-2, and you get your breakout from the head and shoulders. So yeah, I like to look at things very holistically, figure out how macro ties into crypto, how Bitcoin is going to affect altcoins, and then I really try to make sure everybody gets something out of it. Oh, and then finally, these are my founding member NFTs. If you own one of these, you can sell it on OpenSea after. It's designed to provide you with utility, and what you get is access to a premium Telegram channel and one-on-one trading sessions with me. So
Oh, sweet.
there's about 15 or so of them left at this point.
Yeah, and I could see a need for that because I know that I've actually had people reach out to me in DMs on Twitter asking for personal help, like they would pay me to help them chart. So I think a service like that is an awesome feature to have. It's a great idea.
Thank you, thank you, thank you. Yeah, I encourage you to do something like that. Especially if there's demand for it. Um, and yeah, I always wanted to launch something that would give people utility. And then my thing was, is I was always asked, like, Tony, what price levels or what should I do here? And I don't feel comfortable because I don't know anything about this person. So, by these people getting access to my private chat, I learn about them. I understand their risk tolerance, their goals, and then I can at least provide some light guidance and training and education towards whatever they're after. I definitely am always reluctant to give financial advice, but I'm very much the type of guy who says, "Here, learn how to do this yourself." The whole feed a man a fish for a day or teach him how to fish type of thing.
I love that saying. Look, man, and it shines through, especially the first time we meet it up. There's nothing that I appreciate more in life than hard work. I can tell that you're grinding. You're putting out a lot of great content. You're authentic. You're really looking to help people out there. I just really appreciate you coming on the stream, man. I hope we can do this again.
Absolutely. This has been a blast. I would jump at the chance to come back on. And thank you, everybody, for listening to me and supporting myself. And make sure you're always tuning in for CBG.
Appreciate that. All right, look, everybody, we're tuning out. Until next time, appreciate everybody tuning in. I will be back tomorrow. I will be back Friday. Make sure you click the bell icon to know when I go live. And until next time, spread awareness. Let's all carry the education forward. Take care, everybody.